we have to trust in God. We have to do all of these things in faith. Not trusting in how smart your financial advisor is, not trusting in how good your stock picker is or your mutual fund manager is. It's trusting in God. Yeah, you do all of your due diligence. You know who you're working with, you're confident with the strategy, trust in God.
Yeah.
Let him be God.
Welcome to Stewardology, a podcast where two worlds collide. In this show, financial advisor Tim Russell and Pastor Drew Gysi are joined by me, producer Tyler Rutherford, to explore the intersection of financial stewardship and theology. Their unique perspectives help Christians and churches understand and apply a biblical framework for everyday financial decisions so Christians everywhere can grow in their walk with Christ through biblical stewardship. Before we get started, we just wanted you to know that the topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investment and investment strategies involve risk, including the potential loss of principal, and past performance is not a guarantee of future results. Securities and advisory services are offered through Genius Wealth Management, member FINRA, and SIPC. Without further ado, here are your hosts, Tim Russell, Drew Gysi, and Tyler Rutherford.
Welcome to the Stewardology Podcast. My name is Tim Russell, and we're excited to have you with us today. I've got my co-host Tyler Rutherford.
Hi there.
And Drew Gysi, still under the weather, will be back with us shortly. We promise he will be back.
He will.
He will be back. So what are we talking about this week?
Is fear robbing your future? And before I really ask the question that we're trying to address here, I was reminded of a conversation I had with some friends recently. They own a pretty successful business, small business, and I asked them, I said, hey, what are you doing for retirement planning? Are you doing anything investing-wise? Are you putting into a 401k or a Roth IRA or anything? Like, no, everything's kind of staying in cash. And I'm like, oh, really? That's interesting. So I was asking him some questions. Why don't you invest a little bit of that money and give that compound interest time to really work for you? Because they're in their mid-20s. Oh, it's just, there's just like risk there that we don't really know if we want to take. Plus the money's sitting right here. If there's an opportunity with something like with our business, we can just use it and go for it. And I was like, okay, that's great. And I was like, well, what do you think the risk is like in the stock market? Oh, well, it's like gambling, isn't it? You throw it in, you don't know what you're going to get. Is it going to be the red or the black? I was like, well, not quite. I shared with them a stat that we'll get to later in this episode that you're more likely to have a good year than a bad year in the stock market, given the course of time and all that. And they're like, oh, that's interesting. That's interesting. Well, we'll think about it. And we've had some further conversations, and I think they're going to get there. But their issue is that the risk of the stock market in their mind was scary. And they said, you know what? We're going to keep it in cash. And in their mind, that yes, they're keeping the money set aside for opportunity, but in reality, they're probably doing nothing with that cash. So there's a cost there, the cost of doing nothing with your money. And I think for a lot of us, maybe not a lot of us, I want to give you guys, our audience, some credit. I think for many people, we can get afraid of what happens when our money leaves our grasps. Mm-hmm. And then we don't do anything with it. We keep it in a bank account with no good interest rate, not even a high yield savings, or maybe you're the guy that keeps it under the mattress or in the gun safe or something like that. And it's just cold, hard cash. The reality is when you do that, there's a cost. Well, how can that be? It's sitting there doing nothing. Nobody's taking my money. Well, there might be something else we have to say about that.
Maybe.
So there's a cost with doing nothing with your money. And so the question we have today is fear robbing your future? What is that true cost? So I'm excited to get into this outline today, Tim.
So this is going to be a fun episode to talk about. We have the idea of the risk of no risk. That's interesting. So why do people avoid risk? On one hand, we could say it's for a lack of knowledge about how investing works and how to invest, right? They just don't know a lot. Yeah. That, I think, is, let's give the benefit of the doubt. It's probably a large amount of the reason people don't invest. It's general don't know how to start. Then there's the next one be lack of ability. They don't have enough income to invest. They're up to their eyeballs. They like literally every dollar's going out to pay debts or other things, and they don't think that they can afford it. Okay, fine. Usually they're surprised that there are things that they're prioritizing in their life that they value less than the future goal of, being debt free or having some money or being able to retire. And when you show them those priorities, they very quickly make the change with their own budgets and all of a sudden find that they actually do have money they didn't realize that they were spending. Third category, someone who's had a negative experience. I often find this with someone who has had a significant, we'll call it a shock or lost a bunch of money in a market downturn. And because of that, they're going to not want to invest. They don't want to take that risk. They think that the whole thing is rigged and that investing doesn't work. This is certainly true of people who've gone through the 2000, the dot-com crash or got wrapped up with Enron or Bernie Madoff in 08, 09, and the financial crash. And maybe they got burned with the pandemic crash. Like all of these different things are like, it doesn't work. So you buy high and sell low. You're right. It doesn't work.
Yeah.
So don't do that. It's not a good idea. Stop doing that. There's also misconceptions regarding risk, like your friends. It's a crapshoot. You don't know what you're going to get. Like it's all risk. You put money in, you might make money, you might lose money. I've heard stories of both, and I wouldn't know how to be the one as opposed to the other. So there's a misconception about risk. There's also maybe I could flip it around a little bit and also say there's a theological misconception of the role of risk or the positive benefits of risk from a theological perspective. Because if we're putting money in the market, is that gambling or are we trusting in it? Or maybe God doesn't want us to have any kind of risk. He wants us to be safe and trust him rather than the markets. So I think there's some misconceptions there that we could explore. They don't trust the financial markets. They're afraid of what's going on. That's another common excuse. There's a desire for control. When you put money in the markets, there's no control. So there's another one. And the final is, hey, look, status quo. Don't bother me. I don't have time for this. Everything's fine now. It's fine. Everything's fine here. Nothing to see. How are you? That's not a good method of making sure bad stuff doesn't happen, right? Han Solo found that out when he was trying to save Princess Leia. Everything's fine here. Everything's fine. Nothing's wrong. Weapons malfunction. How are you? So if you bury your head in sand, doesn't change the environment. Doesn't change what's coming at you. Yeah. Retirement's coming at you. Debt's coming at you. You got to be prepared.
Yeah. So I'm excited to get into this because a lot of people think that when their money is sitting in the bank, so to speak, and that's where all of their money is, that they think they're safe. They're safe. So what could possibly be the risk here?
Yeah.
And there's a big word called inflation.
Initially, if you think about banks and safety, you're really thinking about It's a Wonderful Life and a bank run, right? There's not money left in the bank. They're going to give me 30 cents on the dollar, and that sounds like the biggest risk. It's not a risk today. It really isn't. I mean, is it a risk? Yeah, I guess it's technically a risk, but it's not a high probability, not something I'd lose sleep over. However, inflation happens all the time, and inflation erodes the purchasing power of your money. So when I have clients who have hundreds of thousands of dollars who just wrapped up in cash, I look at them and I say, you know what? I understand that you want the safety of cash, But you know what you're doing? You're losing money safely. And they look at me and say, what do you mean I'm losing money safely? Well, you're losing purchasing power. It's not that the dollars are disappearing, but the amount of things that you can buy with those dollars is diminishing.
Yeah.
You're losing money, you're losing purchasing power, but you're doing it safely without market risk, without stock market volatility.
Yep.
And that's really the key that people who have money in cash don't understand. So we talk about this with a postage stamp, right? 32 cents was this postage stamp price 30 years ago.
Wow.
What is the postage stamp cost today?
78 cents.
That is a 144% increase. Flip that around and say your 30 cents or 32 cents 30 years ago buys you less than half of a stamp today.
Yep.
That is sad.
It's sad.
And you apply that to gasoline or to milk or eggs, or you pick the item du jour and you're shocked. Look at the price of houses compared to where they are now. Look at the price of a new car compared to where it is now. Look at the price of a newspaper. Well, that's probably a bad example because they don't exist anymore. But all of these things are examples of the economy changes. Now, certain things get more expensive. Some things become cheaper. Computers, 30 years ago, much more expensive than they are today.
Fair. Yeah.
To some extent. We've been able to increase their memory, increase their speed, increase their computing power, and decrease their cost. That's pretty impressive. But inflation is still a real factor that people who have money in cash have to think about.
Yeah.
Inflation happens because governments overspend.
Yep.
And they borrow money, or they simply print more money, causing the value of the dollar to diminish.
Yeah. And inflation has been crazy since 2019. I mean, I don't have a number for it, but we can feel it. You could feel how much less your dollar is worth, or how far it doesn't go compared to where it used to.
Yeah, I'm guessing 35% inflation. I mean, I don't know the real number, but it's it's large.
So risk-taking, you mentioned earlier that you'd be interested in looking at a theological or a biblical perspective on risk-taking. I'm curious where you want to go there.
Well, look, some people say, I want to be a good steward, so I don't want to take any risk, right? So in their thinking, good stewardship means no loss.
Yeah.
That's wrong. That's a completely wrong way of looking at it. In fact, I would argue that in order to be a good steward, you must expose yourself and your assets to risk, not foolish risk, not just crazy amounts of risk, but real, genuine, prudent risk. Now, where do I get this? Well, let's take a look at a number of biblical examples of risk-taking. So Abraham had to leave the security of his land for a land that he did not know. He was a sojourner, took everything with him to a land that he was not familiar with. Immense amount of risk. Joseph took on administrative risk. We have Ruth entering into a very unknown situation to save the nation of Israel and putting her entire life on the line. If I die, I die. And obviously she was successful. I said that about Ruth. I was thinking about Esther. That's the story of Esther. Ruth, right, when she approached Boaz at night at the threshing floor and she presented herself to him and said, throw your garment over me, but essentially be my kinsman redeemer. That was an immense amount of risk that she took in order to protect her and her mother-in-law, Naomi. This is beautiful risk-taking, showing reward. We also see the apostles taking ample amounts of risk throughout their lives. They left their livelihoods. They left their families. They followed a guy. They had nowhere to lay their heads. Foxes have holes, or foxes have their dens, and whatever else, whatever the phrase that Jesus uses. But the Son of Man has nowhere to lay his head. Everyone who went with him didn't have a place to lay their head. They didn't have the income stability. They didn't have shelter regularly, but God provided. They took risks. It was blessed. So we see plenty of biblical examples of it. We also see, this is really interesting. Take a look at Proverbs 22, verse 11. It says, the sluggard says, I cannot go out. There's a lion in the streets. It's also repeated in 26:13. And the idea is really simple. Avoiding risk is actually a demonstration of laziness more than it is prudence. This guy is called a sluggard, not a fearful person. He says, I'm lazy. So his excuse to not do the work, not do the hard thing, is I can't go out because there's something out there that's going to eat me. Now, this is likely talking about an urban environment and a lion in the streets. I just don't think that that's a high probability. I think it's designed to be making the audience laugh and chuckle. Like, you're really afraid that there's a lion in the city. Like, yeah, it happens, but the likelihood and probability of all the people they could eat, it's going to be you like knobbly kneed, weak person. No, they're going after the bigger, juicier target. I'm sure. Don't worry. You're fine. It's just silly. It's laziness to avoid risk. Or we use the avoidance of risk to excuse our laziness. And this really exposes a deep theological truth. And this truth really comes to us in the parable of the talents. Now, I understand that the parable of talents is not really primarily trying to teach us about risk, but it's absolutely one of the takeaways that we should be able to observe from what Jesus shares in this parable of the talents, or the parable of the minas. In this parable, we have a master who entrusts resources to his servants. Two of them took risk. They went out and they doubled the money. The master came back, they provided the doubling, and the master blessed them and rewarded them richly for their faithfulness. They said, good and faithful servant, enter into the joy of your master. The one knew he was a stern man, knew that he would be exacting. He did not want to fail. Therefore, he buried it in the backyard because he avoided risk. He did not want to lose a penny. And the master did not pat him on the back and say, boy, you knew me so well. You knew I wouldn't like that risk, or the risk that money becomes nothing. No, he said the least you could have done is put it in the bank and gotten usury, gotten some interest. You buried it in the backyard. You didn't even do what a prudent person would do who's really risk averse. And then he cast him out, called him wicked and lazy. Here's the reality. Fear produces inaction, preservation, and sterility.
Interesting.
Faithful servants accepted uncertainty, exposure to loss, to risk, and responsibility. They took the responsibility to work with the resources entrusted to them. So here's the thing. Prudent risk-taking is what God requires of his students, not fearful avoidance of risk. Don't hide behind your quote-unquote good stewardship. I'm not going to invest. I'm not going to do the things that I know I should do. Just and cloak it in righteousness, because it's not.
Yeah.
God calls us into wise and prudent risk-taking and trusting him with the results.
Yep.
We don't trust in the stock market. We don't trust in the portfolio. We trust in God. So fear is robbing you by not allowing you to do the things that you need to do, when we come up with all kinds of righteous reasons why we shouldn't do the thing that we should do. And we're lying to ourselves.
Yeah.
We're being deceived.
Yeah, God, when you take a step back and zoom out for a second. The way God's economy works and the way God works, even in your own life, requires both faith and action, not just mere safety and stasis, like just staying still. And think about it. Anything you do in life, there's risk. Any action you take, there's risk because you don't know what the effects will be of the action that you took. And the reality is, as Christians, we need to step into those actions with faith, looking to God and asking Him what to do, and then moving forward in faith, not knowing how it's going to turn out. And this is every area of our life. Who do I marry? How will the kids turn out? What do I do with my vocation? How do I plan for the future? All of that involves risk. Why is your money any different? There's risk involved. The reality is we need to move forward in faith and take prudent risk and be smart about the way that we move forward.
So why don't we inform our fears?
Let's do it.
I think it's helpful for us to recognize that downturns are common. It's not if, it's when the market has a downturn. But here's the thing. Downturns are downturns are regular. They happen every year. In fact, I have a chart in our show notes that I want you to go look at where it shows every single year and where the stock market was at its lowest at some point in the year, but it also shows when the stock market was at the end of the year. And here's what I want you to know. As common as downturns are, and they happen every year, 3 out of 4 years, 75% of the time in the last 46 years, the stock market has had a positive ending value, a positive return on investment, growth, 75% of the time. Any 1 year you invest, you have essentially got a 75% chance of a good outcome. Some of those years are really enormous. Like we've got 30s and 20s and all kinds of really good overall returns. And then some of the years we have some really bad years. 25% of the time we have a negative year. And the average downturn, you know what? I don't even have an average here. I'm looking at 10, 7, there's a negative 2, there's a negative 10, 13, 23, 38, that's a big one. There's a negative 1 and a negative 6 and a negative 19. Those are the negative years that we've had in the past 47. You add them together, we get an average. Let's just say it's going to be an average of 10% down.
Yeah.
Like, guys, you can invest. You can do this. And recognize that the average inter-year drop is actually 14%. It is not uncommon that at some point this year, we could be down up to 14%. Some years much bigger, some years much less. 14 is the average.
Yeah. And that's a good thing though, too, because you need the market to drop a little bit to be able to have your investments go up and have positive years, correct?
Yeah. I mean, I was talking about this with our staff yesterday.
Yeah.
We can't expect growth if we don't also expect downturn.
Yeah.
In fact, it's the downturns that give us the confidence in the price of the companies that we buy when we see how resilient they are to pricing demands and concerns and economic pressures. We actually justify the price through price discovery and seeing where the buyers are coming in saying, this is actually a good price. I want to buy it here. Like, the fact that we have a market that's volatile means we have a market that works.
Yeah.
We have a market that's healthy, that's good, that's strength. Now, I'm not saying that you should embrace and get all cheery when the market goes down. I mean, if you're younger and you're looking for a good opportunity to invest, it's a good opportunity. Yeah. But look, let's face it, when the market goes down, it's scary. I'm a financial advisor. My livelihood, my career, my business, the income of all of my employees is dependent upon what the stock market does. So I care deeply about what happens in the market and I follow it, and I'm not immune to the emotional roller coaster of investing.
Yeah.
And yet, I want people to recognize that it's the very risk that makes the growth possible. If we got rid of all the risk, we would have absolutely no growth.
Yeah.
Because if there was no if there's no risk that something could go bad, everyone would do anything and like everything would go bad. It's just like, it's why socialism doesn't work.
Yeah.
Yeah, you can't have equality. You've got to have winners and losers. You've got to have companies that work and companies that don't. Like, you don't have to have companies that don't work, but you've got to separate the ones that work and that don't work.
You need competition.
You need competition. It's healthy.
Yep.
And because of competition, that means there will be winners and will be losers.
Right.
And there will be people that get wiped out, and there will be new industries and new products that come in. In fact, that's how we create wealth, and that's how we alleviate poverty. I was reading just yesterday talking about the growth in inequity, right? The rich are getting richer, and the lower and middle classes aren't growing as fast as the wealthy classes are growing. And the book I was reading took great pains to point out, but hold on. Are you also not recognizing and paying attention that the amount of people living in dire poverty has been cut in half in the past 10, 15 years? Because of the fact that we have economies that are working, that are providing income to these people. We're building economies down there. So yeah, they're not growing as fast as Bill Gates perhaps, but do you think that Bill Gates doesn't have some kind of impact on the fact that all of these lower income people are actually being dragged into the middle class? Like, guys, you can complain about inequity all you want, but we're actually doing something about dire poverty. Let's not get so upset about that. So I bring that whole topic up in this discussion because, like, we have to recognize that there are going to be winners and losers. We have to recognize that there is going to be growth. And I want you to be investing in the opportunity for growth, not trusting in the market, not trusting in the past performance. It's not a guarantee of future results. Obviously, I know all of those things to be true. We have to trust in God. We have to do all of these things in faith. Not trusting in how smart your financial advisor is, not trusting in how good your stock picker is or your mutual fund manager is. It's trusting in God. Yeah, you do all of your due diligence. You know who you're working with. You're confident with the strategy. Trust in God.
Yeah.
Let him be God. Work diligently as much as you can in the areas of your responsibility, the areas of your expertise, and let God be God. Take risk. He will reward you in this life or in the next.
Yeah.
Take risk.
It's huge. And I have to be careful how I say this, so feel free to pick it apart, Tim. But when you're looking at this chart on the S&P 500 intra-year declines and how the market did that year, yes, we have some down years, but if you've been invested for 30 years, you have seen overwhelming growth over this period of time. And at the same time, think about what $1 got you back in the 70s. And think about what $1 gets you today. That alone will show you how much your purchasing power has eroded over that time and how much inflation has impacted the dollar. But if you would have invested that dollar over the course of the last 30 to 40 years, you actually would have seen growth with that dollar, correct? So,
absolutely.
Is fear robbing your future? Are you simply sitting on a pile of cold, hard cash because you're afraid of what investing it might do? We have to look at the evidence here. A little bit of risk is a good thing because you're going to see more reward than taking no risk at all.
I don't have anything to correct. I think that's absolutely right. Yeah.
So as you walk away from this conversation, we want you to think carefully about what prudent risk taking looks like for you. Don't allow the fear of loss prevent you from taking action. And don't let what you see on social media inform you entirely on what you should do with your money and in your investing. Because remember, fear is a thing, right? We have to take that into account. But at the same time, without risk, there's no reward. So we have to balance that. Prudent risk is what we say. So what are you doing? Are you taking risks to grow your career and your income? Are you taking risks to invest in your company 401k? What about social risks, right? What are you doing to live in a conservative way, maybe living below your means so that you can save and invest for a period of time and stay out of debt? Yeah, it's going to look weird to your friends in your social circle, and that's certainly a risk, but is that something that you value? Is that important to you? even just for cash savings, like if there's one thing that you can walk away with and literally do the minute you're done listening to this podcast is opening a high yield savings account for the money that's sitting in your bank earning no interest at all. You can literally hop on to a bank, an online bank, whether it's Capital One or Ally or what have you. There's a myriad of options out there. Make sure you do your research, but you can open a high yield savings account that gets you at least something, and it doesn't let your dollar just sit there and rot away. So risk, yeah, it's a scary word, but without risk, there's no reward.
Tyler, you're absolutely right. Friends, until next time, take care. God bless. And remember, take prudent, wise risk, all while trusting God. And I believe you will hear, "Well done, my good and faithful servant."
Thanks for joining us on the Stewardology Podcast, where financial stewardship and theology meet. We'd like to help you take your next steps in biblical financial stewardship. Subscribe in your podcast provider to get the newest episode delivered to you every week. Leave a 5-star rating and review to help new listeners find the show. Take advantage of your free personal stewardship review at stewardologypodcast.com/review. Be sure to follow us on social media and visit our website at stewardologypodcast.com for tons of free resources and hundreds of free episodes. You can also leave episode ideas at stewardologypodcast.com/idea. Remember, Psalm 20, verse 7, "Some trust in chariots and some trust in horses, but we trust in the name of the Lord our God." See you next week.